Here we have the hourly price chart for Broadcom Incorporated, stock ticker AVGO. Here we can see that the trading volumes here are spiking in the negative direction to start the trading session on Thursday. Currently, we have some fairly significant selling pressure that is developing at an important level of resistance that's going to need to be addressed here relatively soon. So, in this video, we're going to outline some of these potential levels here and try to identify game plan here for the latter parts of this week. Initially, what we have been pointing to here with the stock would be the fact that the positive upsurge here in trading momentum and the relative strength index has recently broken, and we are seeing a negative momentum reading start to develop in more than one direction. So in particular, we can point to this kind of failed uptrend here, it's broken uptrend in indicator momentum, and then we can also point to a few areas of weakness here that should be noted. So in particular, we've got some downside momentum here, and then some additional downside momentum here, which does suggest a bit of a shorter term decline that might be a bit more severe in nature. We are seeing some negative slopes here, and this follows a broken uptrend in the broader indicator activity. So, at the moment, what has this actually done here? So, what we've seen here is, in prior trading sessions, we've seen AVGO attempt to find some support here at this 20-period exponential moving average, and for the most part, this area did hold, and we were able to retest the prior highs here. The problem with this structure, though, is that we have now created a triple top pattern that's fairly easy to see here. This region here at roughly 1770, just below 1770, has been tested on three separate occasions, and now the market is sort of making a more decisive move here to the downside, as we can see. So this could have been this was forecast in the indicator reading itself. As we were kind of losing this uptrend momentum. And then the broader term, the longer readings here, the longer term readings, we're focused on the downside with some lower highs being shown in the relative strength index itself. So, here with these price moves lower, we're seeing a bit of a confirmation of all of these factors. And now the stock is currently pressuring very important support levels, at least in the near term, which come in at roughly 1715, just below that figure. We have actually broken through here a bit. We have already seen lows of 1701, a bit of a spike low here. We haven't closed below here on an hourly basis quite yet, but the bounces here have been very minimal, and it does look like this shorter term support zone at 1715 is not likely to sustain prices from here going forward. So, in addition to that, we also have to note that, this historical support zone does come in line with the 50-hour exponential moving average. It's the orange line here. A breakthrough here would be fairly significant, and it would suggest that a near-term top is in place. That would start to send some warning signals here, because we would then have a triple top structure in this region here, roughly 1770. And it would show that we were not able to successfully retest the highs just above 1850. So, this would be a warning signal here, because this developing uptrend that was in place seems to have run its course and is likely to start heading lower. From the downside, if we were going to start to look at the stock from the potential downside here, we could start to do some Fibonacci analysis based on this shorter term uptrend. So, for example, we could start to look at some of these Fibonacci levels, although some of them have already been broken. In particular, we can see that the 23.6% Fibonacci retracement of this prior trend move, which rested at 1721.67. This was broken fairly quickly. We really didn't see this area hold for very long, but we did see a bounce here off of the the 38.2% Fibonacci retracement just below 1700. This would have come in at 1692.70. So we can see the bounce here. And this is a significant bounce because it did allow us to retest the prior highs here, which were found at 1765. So, this is an important level to watch on the downside, roughly 1690 to 1695. There's a bit of a difference here in some of the prices. For example, the historical low itself comes in at 1696. But the Fibonacci level itself, the 38.2% Fibonacci retracement itself, does come in at 1692.70. So there's a bit of a price gap here. But overall, this region should be watched because we're also coming into fairly close contact here with the 50-hour exponential moving average. Overall, this is a bit of a sideways trading range. Although we would need to see a bounce out of 1690 to 95 in order to sustain this upper trading range at these higher levels. So currently, the real line in the sand here does come in at roughly 1690. I mean, if we did see a break below here, this would suggest that we are in store for a deeper retracement of this broader move. If we were to look at the 50% retracement of this level, it currently comes in at 1670. That would be kind of the first level to watch here, and this does match up fairly well with the 100 period EMA. I can just kind of draw that out here. So as we can see, there is some confluence here. And then further from there, we would probably be looking at a drop below 1650 because the following 618 retracement level is found at 1645.90 roughly. This does come in line with some prior resistance levels that would be expected to work as support, but we would not be seeing any moving average support in this area most likely. It depends on, of course, it depends on how long it would take for this to happen. We could see the 200 period EMA move up into this area. But if this move does start to happen quickly, then we would be unlikely to see moving average support, adding to the picture and helping to contain selling pressure to the downside. So that just makes it less likely that this area would actually hold. So currently, the real level to watch here, the main kind of issue here does come in at 1690 to 1695. We can call it, you can divide those two in half there. So 1692.50 roughly, and that would match up fairly well with the 38.2% Fibonacci retracement. So this is really the level to watch to the downside. And then to the top side at this point, we would need to see a break of 1770 in order to expect to see a resumption of the prior uptrend. So here's the current market analysis for Broadcom Incorporated, stock ticker AVGO.